Let's get across what is moving markets at the moment. To do that, we are joined by Peter Maguire from XM. Pete, terrific to catch up with you again on a Monday morning. Of course, this week it is all about the central banks, in particular, of course, the Fed. The question being, are they going to go 25 or 50?
Exactly, Andrew. Good morning. I tell you what, you threw up that chart earlier and it's really narrowed as far as, expectation, 52%. That was from CME Group, I noticed. 52%, 25% cut or 25 basis point cut, and then, 48% looking at a 50 basis point cut. I'm erring on that side. I think it's narrowing and it'll probably even sway to the other side. You've got swaps traders very conscious as far as how it pans out over the next couple of days and the position taking. So, yeah, I truly believe they'll have to front load. And if you're trying to achieve, as the chart says, there are 115 basis points worth of cuts by year end, you've really got to get those to, chug along quickly.
So there's got to be a 50, on that basis then, there'd have to be a 50 basis point cut somewhere along the line before the end of the year.
Absolutely, Andrew. I think it'll be this week. I truly do. I feel as though that's where the appetite will be from, the Fed. They're worried about the labour market and overall global concerns. I mean, you've only got to look at the strength of the Chinese consumer that came out over the weekend, the impact that has to luxury goods out of Europe and just consumption. So, we've got I think we're in that, letting the belt out a little bit, and I think it'll be we take it out a full notch.
Yeah, because obviously inflation is not the concern now. That appears to be under control. It's, I guess, more a focus on jobs at this point.
Absolutely, yeah, the economic situation, and that's where you've only got to listen to the likes of, Governor Waller and, the ex-Fed chair presidents from their respective zones, New York and so on, John Williams, and that's where their total focus is, really on the job numbers and looking at, the employment data and economic health of, naturally, America as it leads into this election series.
So on the prospect of those rate cuts, perhaps sizable, coming then, Pete, we saw the US dollar come off, gold doing particularly well, hitting another record high. Forecasts from many, in fact, that it's going to eclipse that $3,000 level.
Yeah, Andrew, well, I mean, I think it's bullish to think that far out to the end of the year, but it could well happen. I mean, we're now through 2,600. It just seems to have extraordinary momentum. You've got that US dollar index just on 101.01. So we'll no doubt be in the hundreds and maybe even touch 99 if they were to cut by 50 basis points. And I think that's going to really spur the likes of gold on even harder. So I'm expecting a big week from precious metals. Keep an eye on silver naturally, and how the rest of the complex plays out. Well, it's just, wait and see. And whether traders move from the equity markets or just look at hedging, more significantly to their positions. It's a time to be, hands on the wheel.
So is it therefore expectations that we're going to see the US dollar continue to weaken from this point then, Pete, do you think?
Andrew, if you cut 117, 120 basis points, it's certainly got to be, take a lot of that hot air out of it, and you're now at 101. So, if that was to materialise by end of year and you achieve that forecast, there's no doubt that the US dollar will absolutely be a lot softer than where it is at the moment. And it's been a great trade. You've only got to look at the likes of yen. I mean, I've got the chart here, 140. It's been dynamic over the last couple of weeks to look at that market. And it's just been, there tells the story. Have a look at the spread, 10-year versus, and that's what traders need to do. Look at, charts like this and really take an appreciation as far as the impact from interest rate policy to what happens as far as a trade.
Yeah, because we do have the Bank of Japan making its decision at the end of the week. Also, Pete, Bank of England too. Yep. What are we expecting?
Oh, look, I'm still erring that I think the Bank of England, Andrew, is very much sitting on their hands. They saw what happened last week with the ECB. They'll see what happens with Bank of Indonesia and, of course, the likes of their Fed this week, and then they'll come up with the decision. And I'd be erring on the side that you probably see a cut. I'm not going to be surprised if that happens this week, because I just think the momentum is just, it's time for cuts. And then, as you mentioned, what happens as far as Japan, I'm not expecting any raise anytime soon. Probably I'll look at October or November for that to happen.
Yeah, because, here's a look at business activity. So we are seeing that weakness in the UK economy at the moment.
Yeah, it's structural weakness, and it's pretty tough over there at the moment. We've all understood how it's performed. Tourism was relatively strong over the summer, but the overall momentum leading into Christmas, I think it's going to be tough from a retail sales perspective. Unemployment numbers are driving up, and the overall strength of the economy. So it's time for possibly the governor to play well. Look at what his counterparts are doing across the globe, and follow the theme.